You are live, sir.
With heavy heart and in a very grief, I just want to mention for all our participants here that just now I have gotten information that our very dear member, who is one of the you can say a pillar for the profession in many in our many activities, especially I being the chairman of the Agricultural Cost Management Board. He is a member of my board, and he is one of the front runners for this profession to take our profession into the agricultural cost management. And he is also one of the lead, lover of this MSMEs and FPOs. He has a huge, conglomerations of FPOs. He's from Nagpur, Dr. CMA Srihari Chaba. He has passed away just a few hours back. So I want to start, we want to start this program by just having some 1 minute, observing 1 minute, silence for our, to show the respect, the departed soul of our very respected, honorable Dr. CMA Srihari Chaba. Let's start this silence. Over to Dr. Aditi.
A very good evening to all of you. FinTechs have significantly transformed the Indian banking landscape over the past decade. Initially, they emerged as disruptors, offering innovative solutions in digital payments, lending, and personal finance management. As smartphone and internet penetration has increased, FinTech companies capitalized on the demand for faster, more accessible financial services, often catering to undeserved or unbanked populations. With regulatory support from initiatives like the UPI and the Reserve Bank of India's pro-digital policies, fintechs became integral to mainstream banking, fostering collaborations with traditional banks to enhance customer experience, expand financial inclusions, and drive technological advancements in the sector. The Banking Financial Services Board of the Institute of Cost Accountants of India understands this. And so today, on 21st of September 2024, they have organized a webinar on the fintechs and the evolution in the Indian banking context. It is our extreme pride and pleasure that we have today with us CMA Manoj Batra, Head Product and Process Government Business Group, Bandhan Bank, as our guest speaker. We also have with us our CMA Chitranjan Chattopadhyay sir, our chairman of the BFSIB board, also with us. Before we start the program, let us start with the Institute anthem.
हसतु मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय हसतु मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय. I swear.
Now I would introduce our chairman, CMA Chittaranjan Chattopadhyay sir, and request him for his deliberations. CMA Chittaranjan Chattopadhyay is a fellow member of ICMI and associate member of Indian Institute of Banking and Finance, holding qualifications from CIPFA London as a chartered public finance accountant. Sir has 38 years of experience of working in the commercial banks in different capacities. He has brought out several publications on banking for ICMAI, which include 3 editions on risk-based internal audit of commercial banks, guidance note on concurrent audit of commercial banks, internal audit of treasury functions of commercial banks, aid memoir on lending to MSME sector, and aid memoir on infrastructural financing. At present, he is the Central Council member of ICMAI and the chairman of the Banking Financial Services and Insurance Board, BFSIB, and the chairman of Internal Auditing and Assurance Standards Board, IASSB, ICMAI. He is also a member of SAPA NPO and Cooperative Committee. We welcome you, sir, and over to you for your address.
Thank you, Dr. Sime Politi, for your introductions. Actually, as I mentioned that this today we are starting this program with a great presence of one of our fellow CMA member who happens to be one of the main pillar of the Bandhan Bank. And today we are immensely happy that he has come over here and he will be deliberating on a very important session on the FinTech. And let me I welcome you with my all big heart, because you have always been kind enough to be with us in many of our programs. And today we are really to that extent, I must say that your contribution to the profession is also very heartwarming, and therefore today's session I also dedicate to the fond memory of our Dr. CMA Sri Chaba, because he was an immensely learned personality of our profession. Gentlemen, today this program we are having with doctors. We are having with us Manojji. Manojji is a very experienced banker, and today he will be discussing on FinTech. In fact, the FinTech is actually one of the terminology as of today, which has become everywhere. We are using now FinTech, in whether it is in shops, whether it is in markets. Everybody is using FinTech. Maybe the nitty-gritty they are not aware. In fact, FinTech is playing a very pivotal role in financial inclusion, because FinTech or financial technology is rapidly transforming the financial services industry. One of its most significant impact is on financial inclusion, which refers to the effort to ensure that individual and businesses have access to useful and affordable financial products and services. And these include, of course, transactions, payments, savings, credits, and insurance delivered in a responsible and sustainable way. So this financial inclusion for financial FinTech is going to play a big role. In fact, a financial exclusion is a global challenge, and that financial exclusion, should be overcome by the financial FinTech. And already from our institute, as you are all aware, that we have conducted many sessions on many aspects as of white label banking, many other aspects of the FinTech. Already we have discussed in many sessions, webinars. But this, when we'll be talking, we'll be listening to our speaker like CMA Manoj Batra. That would be different, because he himself is now, in a very responsible positions in his bank, Bandhan Bank, for which we are also very much proud of, because Bandhan Bank's headquarters is situated at Kolkata itself. And that way, I just want to mention before you that today's session, I am sure that this whole session, he will be delving in a very lucid way, as I just want to touch upon 2 or 3 very important issues that, the fintech solutions for financial inclusion. This will facilitate increasing access and reducing cost. And mobile banking, payments, digital identity and authentications, microfinance and credit scoring, remittance and cross-border payments. And recently, one of the announcements of Reserve Bank of India, as you all know, the digital lending interface, and that has been also going to be a very game changer in the lending process, where the account aggregator, Aadhaar card, and as also your PAN card will be the only instruments through which the farmers, the MSMEs, they will be benefited. And bank is going to develop many products, many innovations are going on in the banking sector. We'll be all listening from our speaker today. He's the lone speaker today, solo speaker today. So therefore, we are all eager to listen from him. And I'm really grateful again to all the participants to extend their support in these sort of programs. Whenever we have conducted these sessions, we have found that many of the participants, they are throwing their questions and they're getting their doubts clear from this session. So I request everybody to put their questions in the chat box so that we can take up this matter with the speaker, and speaker will definitely come up to your expectations of his through his reply. With this, I again congratulate our own member CMA Manoj Batra for having been a very pivotal personality in Bandhan Bank, and we are all proud of you, sir. Thank you.
Thank you, sir.
Thank you, sir, for your wonderful address. Now, briefly, I would introduce our guest speaker for today. CMA Manoj Batra, sir. He is the head product and process government business group, Bandhan Bank. He has more than 16 years of banking experience and has worked in many PSUs, namely Corporation Bank, Allahabad Bank, and IDBI Bank. Sir has a BCom from Delhi University. He is Masters in Economics from Annamalai University, PGDBA Finance from Symbiosis University, and MBA in Finance and Business Analytics from Indian Institute of Management, Kozhikode. He is a CMA from the Institute of Cost Accountants of India, JAIIB, CAIIB from the Indian Institute of Banking and Finance, and Certified Credit Officer, COO, and Certificate in Trade Finance, CTF, from the Indian Institute of Banking and Finance. We welcome you, sir. It's our absolute privilege that we have you today with us. The floor is all yours, sir. Over to you.
Thank you, Chairman sir, Chitranjan sir. Thank you, Madam, Aditi Madam,
Thanks, sir.
for this warm welcome and the introduction. So today we are going to touch upon a very relevant and concurrent topic, I would say, which has taken over the banking industry per se, I would say. And not only banking, I would say banking, uh, finance and insurance, to what we call BFSI industry, with a storm. There was a general misconception that this finance has all to do with money, and technology to certain extent is good, which would automate the processes and would make the things easier. But it is not like any kind of a gaming industry, or I would say any entertainment industry, where it will be taken over by the technology altogether. But over the years, what we have seen is that it is increasingly being taken over by the technology, and that's how this term fintech, or which is an abbreviation of uh, finance technology. So fintech firms, when we refer to it, we refer to the technology firms who are dealing in finance. Okay, it can be banking, it can be insurance, it can be any other related field, whether it is related to recon processes of the bank, reconciliation process of the bank, or it is related to customer interface, like a mobile banking app or a payment app. It may be Google Pay, Phone Pay, Paytm. So all these, are the companies basically who are technology companies. I mean, some of these technology companies, for your reference, are now bigger than many of the banks. You take example of Google Pay. So Google is not a NBFC. It is not a bank. It is not a finance company. It has no license for being operated as a bank or a finance company in India. But it is a technology company that we all know. But with the help of its technology, it has extended its digital reach to so many users that it is now bigger than many of the banks in India. I mean, in terms of balance sheet, in terms of user base, in terms of their profits, it is much bigger than many of the banks in India, many of the small banks. Similarly, Amazon Pay. Amazon is a consumer goods company, as you know. So it is not a bank. It doesn't own a banking license. Similarly, uh, there's Phone Pay. Phone Pay is also a technology company. So the point here is that uh, this started like you know uh, it start. I mean, when it started, it doesn't look like it becomes so big that it will take over the banking by a storm. So let us start the today's topic. Today's topic we have is fintechs and their evolution in the Indian banking context. Okay, so I will briefly cover the agenda. So this will be the agenda. We will go in a flow where first we'll introduce what are the fintechs and then how it started, and then thereafter we'll go to the initial phase, which is called the emergence phase, which it all started in 2008 and 2008 to 14, where we stood. Then growth phase of the fintechs, which is the rise of fintechs in lending and regulatory push, okay, which was 2015 to 17. And maturity phase now what we are experiencing, when we say they have become so big that they are bigger than many of the banks in India, which is the diversification phase from 2018 to present. Then we'll also discuss about the key drivers of fintech evolution. What are the recent trends and what is the future outlook of fintechs? And very relevant and important topic is how banks are coping up with fintech disruption, because these are the companies which have disrupted the market. Now it is important for the banks to cope up with this disruption. Otherwise, some of the banks may be wiped away, and ultimately fintechs only will remain. Okay, so there are some successful case studies where there has been a collaboration between the banks and fintechs, and it has gone really well. It has helped the consumers, the users, end users, and that is how it has come up really well. And finally, the conclusion part. Okay, so let's go to our first topic, which is the fintech and the revolution, Indian banking context, and the introduction to it. So, the fintech evolution in Indian banking, and before I start, I must give you a fact that uh, India is the biggest market for fintech firms. Okay, we have the largest number of uh, fintech firms in the world, and we are also, these most of these are startups which have grown big, and we are also the uh, you can say that it is the biggest use case also, because we have one of the largest population in the world. So whatever the technology which is brought into, is used by many of the users, which otherwise would not have been possible in many countries except for China and few other countries where this much population is there. So the evolution in Indian banking context, which is the largest market, it has been transformative. It has driven innovation. It has enhanced the customer experience and has reshaped the financial services landscape. When we say transformative, of course, uh, banking or banking firms, finance firms, insurance firms, they have been improvising on the processes and the customer experiences, but that was going at a very snail pace. Okay, we, uh, I mean, I can give you the example when I joined the bank as a clerk in 2002, and then as a probationary officer in 2004. So even till that time, the entire banking was manual. I mean, we used to have ledgers where when the customer is walking in for cash withdrawal or cash deposit, so we have to take out see the account number, take out that particular ledger. It used to be bulky ledgers where there will be an entry which will be made against that uh, account number, and then the same will also be manually using a pen. It will be updated in the passbook also. I mean, this used to be the time when there was mechanization happened, and then there was a time when computers were brought in, and in computers, first it was ALPM, we used to call it, automatic ledger posting machines, which was standalone computers. Then thereafter, core banking systems came in, where all the branches were connected, and you can see the balance of any account of Mumbai sitting in Delhi. You can transact also. Payable at par checks were introduced. Thereafter, ATMs came, so you can withdraw using ATM. You did not go to the branch. Okay. Then internet banking came. Then thereafter, mobile banking came. But now, if you see uh, the younger generation, you know, there was a recent survey which showed that people who are youngsters who are particularly less than 30 years of age, they were interviewed, and 90% of them have not seen their bank branch. Okay, they have not even seen which branch they have the account. They know, okay, my account is in ICICI, my account is in HDFC, but they have not seen which branch they have the account. Probably they started their first job. So the salary account got opened with the tie-up of head office, but they don't even know. They have been using it through internet banking, through mobile banking, but they have never seen their branch. They don't even know which branch my account is. 90% of the people, and for the people below 40 years, 90% of them responded that in the last 2 years or 3 years they have never visited their branch, and that may be the fact. That may be true for most of us. I mean, I come here because I work in a bank, but otherwise, I mean, my wife may also be going because she's also a banker. But my children, they don't even know. My brother, he has never visited his branch. He just uses mobile banking. So, point here is that the transformation which has happened post 2004, I would say 2010-12 onwards, that is I mean has impacted so much that we can call it a transformation. It is not like moving from physical to digital and digital to ATMs and like that, and it was not the kind of evolution which was happening earlier. It has now completely transformed, and it has driven the innovation. So now you see the UPI chairman sir talked about UPI and ULI, which uniform linkage, uniform line of credit. So which in line on lines of UPI and PCI is coming up. These all innovations are such, which basically help the masses at large, and that is why this is called digital public infrastructure (DPI). Okay. Now, earlier it used to be very difficult to transfer money from one person to other, even within the bank. Okay, and you should write check or take a DD or transfer this money. And if you have to transfer it to some other bank, then you have to take care that you put in correct uh, number of digits, IFSC code. Even one mistake can land in sending money to a wrong beneficiary. But now with UPI, it is so easy. You just scan the QR code, you just use the mobile number and send the money. So this is nothing but innovation. This has made the task easier for merchants, kirana stores. They just put a standee over there. Earlier, it used to be so difficult. They used to collect the cash for everything, and then they used to count it, tally it, and they used to go and deposit it in the bank. Then they will get the credit, and bank will then have to do dispose that cash with the RBI. So all that has gone. If you see the cash in circulation, it has come down drastically, almost 80% it has come down. So this all because of thanks to fintech revolution, which has driven the innovation and brought new products. And of course, this has helped in enhancing the customer experience. It's all the biggest beneficiary of all this is the customers. The customers have got benefited a lot. Now you need not go to bank branch for doing any transactions. Like I said, the trends or the surveys are also showing the same result. Your mobile is everything. So even you need not visit the mobile banking or app of your bank to do any transaction. You can do it through any UPI app. The UPI is linked to your bank. You can use Google Pay. Google Pay is not your bank, but you can make payments using Google Pay. You can even pay your bills, electricity bills, water bills using Google Pay. Okay, you can do shopping by just scanning the QR on Google Pay. So I'm not advocating Google Pay, but the point here is that it has helped the customers only. It has enhanced the customer experience. What banks, individual banks were not able to do. Some of the banks, of course, did uh, uh, a lot of work in enhancing the customer experience, and they came up with their own apps and all. But these tech companies have actually thought out of the box, and they have uh, put customer in the center and thought from the customer experience perspective. And this has helped the customers a lot. So this has all these things have reshaped the financial services landscape. The financial services landscape earlier used to be what it used to be. Now it has turned into an entirely different uh, kind of a landscape. Okay, so that is the thing I was talking about. Okay, now over a past decade, India has actually emerged as one of the largest and fastest growing fintech markets, which I was mentioning when I started my session. So globally also, if you see, it is the largest fintech market. Earlier, Singapore used to be the largest. Now we are the largest, and Singapore is after us. Okay, and it is largely, it is fueled by the advancement in technology. Advancement in technology, increase in the smartphone penetration. Again, smartphone penetration is one of the factors which has broadened the market landscape, because with everybody having the smartphone, as I said, we are world's number two in population. So the more people have smartphones, the more use of technology will be there. And also the support in government policies. So we were talked about DPI, digital public infrastructure. So digital public infrastructure is nothing but these initiatives which government has taken. For example, the Aadhaar and the mobile penetration, the UPI. So these are the ones. Now ULI is there. There is one BBPS. There is one ONDC. So these are all the ones which government introduced, and then all the banks and fintechs are riding on this DPI. Okay. So we'll see. we talk about the various stages of evolution and what are the trends which have been there in each stages as we saw in the agenda. Okay, so the first phase we were talking about is we call it the initial phase, which was from 2008 to 2014, when these fintechs, the financial technology companies, emerged. And primarily when they emerged, they were in payments field only digital payments. We had not seen any other use case. Okay, so this was the three broad trends which we see during that period. First is the digital payments. It was in the early years of fintech, where the companies like Paytm, MobiKwik, Oxygen, okay, these were having mobile wallets and prepaid payment instruments, PPIs. Okay, it was used like to provide an alternative to traditional banking system. The traditional banking methods had bank accounts with either internet banking or mobile banking at that point of time, like 2008. But they provided an alternate of mobile wallets and PPI. Okay. A PPI is nothing. It is also similar to mobile wallet, but it is for a particular use case. For example, FASTag. You pay your toll payment through FASTag. FASTag is a PPI. It's a prepaid instrument. You first load the money, then only you can use it. It is not a postpaid instrument. So it's a prepaid instrument wallet. Okay. And mobile wallets of, for example, this Paytm had mobile wallets. That time UPI was not there. Okay, so what they introduced is you download my app, you will get a wallet. You load money into that wallet, and then you can use it anywhere. You can pay it to Kirana store. You can make payment to your friend, family, like that. Okay, so that was the trend in initial phase. Then there was e-commerce integration. So we know Flipkart, Amazon, these are the e-commerce, I'm sorry, e-commerce firms which are there. So now these e-commerce firms basically, they were providing platforms to do digital purchase and electronic commerce, we call it. Okay. That time it was an initial stage. So we were all like, using it for making our purchases. But in that, there was a integration of payment methods. For example, Paytm wallets or MobiKwik wallets, as well as the payment gateways, which is a third trend which emerged during that period. So payment gateway is nothing but a medium to enable the various payment modes. Okay, these payment gateway companies, these are also fintechs basically. The Razorpay and GC Revenue were there who introduced payment gateway solutions. So any small business, they want to accept the digital payment. Okay, one way is that they give everybody their account number. Okay, this is my account number. You remit the money through RTGS or NFT in my account number. The other way is they do a tie with payment gateway. This payment gateway is a page where you get the buyers will get an option to make payment through debit card, credit card, or maybe mobile wallet or net banking. So they have internal integration with Visa, Master, RuPay, and also various banks for net banking. So they allow you to use your own net banking or debit card or credit card and then make the payment to the merchant. Okay. So any, for example, e-commerce merchant is there like Amazon or Flipkart. So they will give you a payment gateway option when you do a purchase from their site. So they will allow you to use the payment gateway to make the payments. Okay. So this was the initial trend, like 2008 to 14. We can see these were the three trends which were there. Okay. Thereafter, in we call it growth phase 2015 to 17, when these fintechs, they started coming into lending and regulatory space. Okay. So now the next three trends which we saw were when the government initiatives were introduced. For example, Indian government, it launched several initiatives, okay, at that time, as you know, Digital India, Jan Dhan Yojana, Pradhan Mantri Jan Dhan Yojana, to foster financial inclusion. Chairman sir also talked about financial inclusion and role of fintechs in financial inclusion. Okay, now this fintech companies, they used this digital India services, and they use this public infrastructure, digital public infrastructure, or DPI, to provide the digital banking services to the unbanked and underbanked population. Okay. Then UPI revolution also came into this, which is the, I think, so far the best thing which has happened to the Indian banking and fintech industry. And now we know that this UPI volumes are such that it is uncomparable to volumes of any payment system across the world. Like we are, I mean, not only number one, we are far, far away. We have, than payment volumes of any other country. So if somebody, we can say the nearest, I can tell you the distance in terms of galaxy. If somebody is at the Earth, we are at the moon. Okay, this is the distance we can say if you see the volumes of UPI. Okay, but it was introduced during that period, and it is a revolutionary kind of a system. Okay, now once UPI came in, so large, tech companies utilized this space like Google Pay, Phone Pay, and Bharat Pay, which you're talking about. They are the ones who are the biggest beneficiaries. They used UPI to build their own, ecospace, we call it in technology term. Okay, they basically uh, ride, we can say, and terminology and technology, we say they basically ride on this UPI platform to build their businesses. Now you find everything on Google Pay. Even you want to take a loan, you will find it. You want to buy insurance policy, you will find it in the either Google Pay, Phone Pay. You want to pay your bills, you will find it. You even want to open an account, you will find it. You want to buy a FASTag, you will find it. Because they have a customer base. The customer base is so big that they can sell. When we say sell, they can cross sell, they can upsell anything. Okay. So that is the thing. Now, thereafter, lending also came in. There are platforms like Lending Card, Capital Float, Rupee. These are the platforms which are providing unsecured loans to the MSMEs and filling the credit gap which was left over by the traditional banks. Okay. Similarly, peer-to-peer lending platforms like FairCent and Lendbox, they also began providing alternative financing options. So this was basically in this period, you can say that riding on the UPI platform, riding on the Aadhaar platform, riding on the Digital India platform, all these companies, build their own businesses and made life easy for the Indian consumers. Okay, this was the growth phase of the fintechs, and they have grown like anything during this phase. Even MSMEs, if you see, they're they are basically dependent on banks for their working capital limits. Okay, but if you ask me, now I am not talking as a banker. If you ask me, if I'm a businessman, and probably you all can relate to it. Uh, if I'm a businessman, okay, for me, what matters is my business. Okay, I have an order in hand. Okay, I have to take decision by evening whether I can supply that order or not, because my buyer or is not giving me the option to think beyond that. But I don't have money. My money is stuck in my working capital. I have already dispatched one order yesterday to one of my clients. I have the idle capacity, but I don't have money. I'm waiting that my funds will come, then I'll start the next working capital cycle. So my concern is business. I am losing business because of working capital gaps. Okay. Now, in that scenario, if you go to bank, do you think a bank will be able to take decision in one day or maybe 3 hours, 4 hours? If it is secured lending, maybe yes. That too, you get a very proactive branch head, branch manager, asset officer. But if it is unsecured, definitely no. They can't take that risk. But these fintech platforms, they at least provide you that opportunity. They are giving you options to have some unsecured loans based on your credit history, based on your uh, you know um, if you have registered on their platform and they are tracking your sales, so how much turnover you do, how much you know defaults you have. They are having various parameters. Okay, they will do one time KYC and see your shop and your stock position, your GST and everything, they will see, but then they will give you a standing limit. So you can have, if you want a quick decision to be taken, and if finance is the only thing which you are concerned about, then these are the platform which can be really helpful. I mean, to some extent. I mean, I would not say that you require 50 lakhs, so they will be 50 lakhs in 2 hours. But yes, of course, if you want to have, depending on your net worth and other things, they will support you to some extent. So this was during the growth phase that all these things happen. Now we move on to next phase, which is the maturity phase. This maturity phase is started 2018 and currently also it is going on. Here, various diversification also which has happened, and the integrations with the banks is also deepening. Fintechs and banks are working hand in hand now. Earlier, some banks saw it as a competition, and they thought that they will take away all my customers, but it was not like that. Okay, the fintechs have actually become the last mile, I would say, last mile connectivity, where some of the gaps were there which banks were not able to fulfill. There, these fintechs have reached out to those segments of customers digitally through their platforms, and they have kind of, become a preferable choice for the bank customers. Thus, they are having a partnership with the banks, and this partnership is going hand in hand. Uh, to some extent, it has helped the banks also to expand their reach. Nevertheless, some of the banks are still treating it as competition, and they may not be very welcoming. But over the years, I have seen that even PSU banks are having tie-ups with the fintechs now, and they have introduced their own fintech engagement policy, which they call, okay, where they do partnership with all these fintechs to provide value-added services to their customers. So some of the diversification, when we talk about diversification, we see the different types of fintechs which have emerged during this period. The first one is neo banking. So neo banking is nothing. I mean, it is not a term which is defined by RBI or any other regulator. But I'm sure that many of you must have heard of this term. This terminology has evolved with the usage of neo banking apps. Okay, it it appears that it has something to do with banking, but let me tell you that of course it has everything to do with banking only, but there is nothing called neobank. It is only a fintech company. Okay, so some of the fintechs like Neo is one first one, then RazorPayX and Jupiter. Okay, they have launched neo banking platforms which provide a fully digital banking experience. They don't have any branch. Okay, but they are the ones like Jupiter. If you ask me, okay, some of you might have heard of it. So Jupiter uh, is one of the most preferred neobank platform. Okay, they allow you to open your account instantly. Okay, digitally. They allow you to track your expenses, automate your savings, and they're particularly targeting on millennials and digital first customers. Millennials are the young generation we talk about, and digital first customers are the ones who prefer digital channel over any of the banking channel. Okay, so these are the basically firms, fintech firms. They are, you know, uh, they are nothing but an app, a mobile app. Okay, you download the app, follow the steps, and in 5 minutes you're done with the KYC and you open an account. Okay. Now they will give you a very beautiful, we call it in the technology terms, UI and UX, user interface and user experience. So it will not look like a it bank mobile app or banking app. It will look like as if you are playing a game. Okay. It will give you points for every payments. It will, help you, if you are doing a SIP through their app, they will give you some cashback, plus give you a thumbs up, okay, plus give you some points. So you add those points. So they're targeting the young generation, okay, maybe 20, 25 years old. They like it. In their circles, they will say, Arey, yaar, you should open account with Jupiter. So I was talking about this generation when I said there is a survey which has happened and which says that 90% of the people below 30, they have never visited their branch. Okay, now, so if you talk about Reserve Pay X or Jupiter or Neo, they are not the banks. They will open the account with some of the banks. Okay, they may be at the backend. The account is open with RBL or IDFC or IDBI, but in the front end it is Jupiter. So the millennial he knows only Jupiter. The young person who has opened the account online, he knows Jupiter. He doesn't even know that my account is with the IDFC. Somewhere in this statement it will shown that it is IDBS IDFC account, but which branch, which type of account, he's not aware. He is just following the app. Everything he is able to do through that app, so he's happy. He doesn't want to go to bank branch. Why he will go? He doesn't have any other needs. If he needs some short-term money, he can take a personal loan from there. If he needs any housing loan, he can just put up a request there. Somebody will come to his house, take his documents, and do the housing loan formalities. If he wants a car loan, he can do it online. Okay, if he wants an education loan, that also option is available. If he wants to place a FD, that option is available. If he wants to do some SIP, that is also available. So whatever uh, requirements may be there for a millennial or a youngster, they have accounted for everything. Okay. Now these are the neobanks which particularly targeting only younger generation. Okay. Second category is the digital lending platforms. So fintechs have also come into the digital lending space. Some of the examples are Just Money, Kish, Flexi Loans. Okay. And they have further evolved using the artificial intelligence, AI, and big data to assess the credit worthiness through alternative data sources, making lending more accessible to the consumers and small businesses. Now, I'll spend some time here on describing the alternative data sources. Okay. So what they talk about is that when you're going to a bank, okay, for MSME, or take example of a small kirana store, which is going to a bank for getting a working capital limit. Okay, so what are the typical, things bank will see? They will ask for a audited balance sheet. They will look at the balance sheet. They will see your net worth. Then they will see your turnover for last 3 years, whether it is growing, declining, and they have a turnover method through which they calculate the working capital requirement. They will also see your profit, net profit. They will calculate your interest coverage ratio. Okay, if it's a term loan, they will calculate the debt service coverage ratio. Okay, then they will see your uh, turnover ratios. Okay, sales turnover, debtors turnover, creditors turnover. So these are the typical methods through which they will calculate, and they will come at a figure and they'll say, okay, this is I can give you the lending. Okay, but yeah, tell me frankly, as in, if you are a small kirana store and you may not be having, you may not be able to afford a very uh, good chartered accountant. Some you are maybe consulting some accountant, or you may not be consulting some accountant. You are preparing your balance sheets on your own. Okay. So are you really focusing on all these ratios and which bank is considering? No, you are not focusing because your focus is on increasing your sales and running your shop. Sometimes you are expanding every day. You started with few items, but then you are expanding. You are putting every money in the stock. So your stock turnover may not be very good. Okay, and your network may not also be very good because you have put entire money in your shop. You have opened a new shop. So your focus is that first 2 years I will put my entire money in building my shop and putting more and more stock so that customers can rely and they can come for anything to my shop. So you will not focus on this ratio, but this is the time, first 2 3 years is the time when you desperately need the finance. Okay, so there are alternate uh, data sources, okay, through which this fintechs basically are assessing the credit worthiness, and this is becoming more prominent now. Okay, so and it is all segment dependent. For example, now payments are happening through UPI. You have a QR code. 90% of the payments are happening through that. Okay. Now what fintechs will do is they will give you a UPI surrogate product. Okay. This UPI surrogate is what they will say. Okay, whatever your daily sale which is happening, so I will not even require your balance sheet. Okay. What I'll do is I come to your shop. I will see your shop. Okay, and I will see how old your shop. They will have this, their credit model will have all these parameters. How old is the shop? Okay. In the vicinity, how many similar shops are there? Okay. What is your daily UPI sales? Okay, through QR. So they can, put in all these factors and they can give you a credit score, and based on that, they can give you a limit. It may be more or less than your uh, what limit bank arrived at through turnover method. But remember, this is an unsecured limit. This is a digital limit. It has nothing to do with going to bank and submitting all those documents. So basis your alternate sources, data sources assessment, they have arrived at a limit. And they will say that, okay, fine. In bank, you are paying monthly EMI, but you have to give me daily EMI. So whatever you are collecting every day, I'll give you the credit of UPI by deducting my installment. Now, someone who is genuinely interested in business and he is focused on maybe increasing the business. Okay, for him, these fintechs have changed the way they used to do their business. The access to credit has become better for them. Okay, and now banks have also started the same thing. This was started by fintechs. So as I was saying that banking has evolved, the landscape has changed. So banks have also started the same thing. They will also say, okay, I put my Sandy or my QR and I give you a GST surrogate. Now all the banks, most of the banks are offering GST surrogate product, QR surrogate product, UPI surrogate product. Okay, where it is unsecured. You don't need uh, any property to give and make it a secure lending. So this is how the landscape has changed. Third is on the partnership with the banks. Okay, the banks are now realizing the potential. I touched upon this point briefly earlier. Banks are now recognizing the potential of fintechs, and now they are starting to partner with these firms uh, to co-create the solutions. So now there are innovation hubs at NPCI, at RBI, like RBI Innovation Hub, you might have heard of. NPCI FinTech Fair, you might have heard of. So banks and fintechs, they go with a solution. RBI Innovation Hub will allow them to display their solution with them. They co-create a new product. You might have heard of a product called Smile Pay. Federal Bank recently launched it. You can make the payment just by smiling in face of the camera. Okay. this is a RBI approved product. So there you get it validated by RBI, and then you can launch it your own product. Okay, this is a co-created product by Federal Bank and one of the FinTechs. Similarly, API banking. Okay, now API is called a full abbreviation for Application Program Interface. API is nothing, but it's a connection between bank server and any of the outside world. Okay, for example, a fintech application. Now earlier, now you know the UPI. UPI is nothing but it is riding on the APIs. In a fraction of second, uh, you intend to make a payment, for example, scanning a QR to a merchant where you bought some stuff from, for example, stationery for your kid. You scan the QR. The QR is of ICICI Bank. Your account is in Bandhan Bank. Okay. In a fraction of second, your account is debited. Money goes to NPCI. From NPCI, it goes to, uh, let's not talk about money here. Let's talk about the message, instruction of debiting the account, giving the success message to NPCI. From NPCI, the success message goes to ICICI Bank. Okay. And it all happens in a fraction of second. So how does it happen? So it happens through API. Okay. API is application programming interface, which is kind of an open link, which has been first established between NPCI and Bandhan Bank and NPCI and ICICI Bank. So first API call will happen where Bandhan Bank account will be debited and the success message will go to NPCI. NPCI, when got the success message, it sends the API response to ICICI Bank and says, okay, this money is confirmed. Actual settlement is happening every 8 hours, but that success message goes based on which your transaction is successful and you are able to purchase the goods. Okay. Now, this has become a cornerstone for such collaborations. Banks like HDFC, ICICI, Axis, they are working closely with fintechs and to offer enhanced customer experiences through their mobile apps and digital platforms. They are riding on the API banking platform. Another example of fintechs, there are different examples which is discussed earlier in terms of lending, payments. Another example is wealth tech and insure tech. These are the terms for wealth technology firms, wealth management. Wealth management is a portfolio management for large value or HNI clients, where they are given services of uh, basically managing their wealth. So they can be offered mutual fund investment options. They can be offered share stock investment options or fixed deposit options like that. Okay. So their wealth is managed on a day-to-day basis, and the portfolio return is communicated to them through an app which shows their IRR, their XIRR, internal rate of return, extended internal rate of return, uh, so that they are able to track their wealth. Okay, so there are fintechs which are there into portfolio management services called wealth tech, and also there are uh, firms which are into insurance technology. So they are called insurtech. So the companies like Grow, Zerodha, they are the ones who are into wealth tech, wealth management. And the companies like Policybazaar and ET Money, they are offering simplified investment and insurance solutions. Okay, so insurance also you can now buy online everything, even car insurance, for a new car or even an old car. Yeah, there are companies, which are offering you completely digital experience. They are all fintechs. They will tell you, okay, you put in all the details, the year of purchase, the condition of car, everything, and then you click on the pictures. And with this, you can just, get a policy issued maybe in 5 minutes time. I don't think it was possible, 10 years back when if it is an old car, then insurance advisor will come down and He will have a look at the car. He will, take a copy of the chassis with a pencil on a blank paper. He will kind of do the inspection. Then he'll go back. He will submit his report, and then after 3 days, you will get the status of that report. And within 7 to 10 days, the policy was used to be issued. But that is nowhere. I mean, no more the scenario now. Everything has changed with the technological advancement in this sector. So this is about the we have discussed, in three phase: the initial phase, the growth phase, and the maturity phase, where we have talked about how fintechs came in, what role they played initially, and how they matured, and what all roles they are playing now. Now we'll talk about the key drivers of this evolution. Okay, so these are the drivers. The first is the Aadhaar and eKYC. Now we know that we have the largest Aadhaar database in the world, okay, after China. And this has actually played a very pivotal role in streamlining the digital onboarding for customers. Now if you don't have an Aadhaar, which you can help you in doing the electronic KYC, eKYC, then you cannot open frictionless digital accounts, which is now, happening now. And Aadhaar is also being used for eKYC for digital loans, small ticket loans, issuing the insurance policies. Okay. So this has become, see, if, imagine a world, all these fintechs, whatever they are riding on. I have mentioned a term called DPI, Digital Public Infrastructure. And I also mentioned that these fintech firms are riding on this DPI infrastructure. So imagine a scenario where this Aadhaar and eKYC infrastructure, DPI, uh, was not there. So in that case, every fintech firm will have to develop its own method of doing the KYC. And one is that they would not have been uniform. Two is that every infrastructure is to be maintained separately. Three is that every infrastructure has to be certified by the regulator, RBI, or for insurance, it is IRDA. Okay. And for stocks investment, it is SEBI. So that, there is no, compliance issue later on. Okay. Now, since there is a central database and mechanism available, they just have to create their own layer. We call it digital layer on top of this, and they can use the services. This is again happening through APIs. Aadhaar eKYC has its own APIs which are exposed to anyone who is having a fintech app, and they can use the Aadhaar database. So this is one which is a key driver for this evolution which has happened over the years. Second is a regulatory sandbox. I also talked about this. I touched upon this topic. So RBI has provided an environment. Okay, it's called a regulatory sandbox. Okay. Now, what is a sandbox? The sandbox is basically a prototype system where the innovations or innovative products in the fintechs, they are allowed to be tested in a controlled environment. Okay. And anybody, anybody in any fintech, either with a co-creation with a bank or standalone basis, they can register their application. They can apply for a sandbox testing, and RBI will pick up. They come up with themes, different themes for uh, regulatory sandbox. And if you are falling in that theme, you can apply. If you are selected, then they allow you to be present your case, and then the rigorous testing is happening over there. After which RBI gives its in principle approval to launch that product. Okay. So this has helped the fintechs, because what has happened, we have all seen the Paytm story. So Paytm was not launched this way. It was like something which came up during demonetization, and it started growing up. It was a very beautiful story where they eased the life of billions of people. by providing the QR codes or UPI payments and a beautiful app, but they did not, their systems were not certified by RBI. There are a lot of compliance issues, okay, for which they were regularly facing the heat from RBI in all the audits which were happening. So once they were given payment bank license, so after that, in the regular SSM audits by RBI, they were being questioned on the process and they were being warned of correcting their processes, okay, for which somehow they became so large that they could not do it in a provided timelines, and they could not correct their systems, and bank had to cancel their license for this thing. Now they had to suffer so many losses because of that. So uh, now the thing is that with regulatory sandbox, these approvals and wherever the process correction is required, that is happening upfront. Okay, any new fintech which is having a new idea, want to launch a new product, they first go to RBI, take an approval on the processes, on the technology, on the security aspects, and once the approval is there, then they move forward. So this is actually a very good system. Okay. The other rider, I mean, this is a so this is acting as a driver now. All the innovations are happening in a controlled way through the regulatory sandbox. Then comes the Bharat Bill payment system. So as you know that a lot of payment aggregators were earlier there. Imagine a scenario where earlier you have to make an electricity bill payment. Okay, you go to the website of that electricity company, click on the bill payment, then there you get a payment option, you make the payment. But now, have you ever imagined, how you get a reminder for bill payment and just one click, you are making the bill payment you through Google Pay, Phone Pay, all these apps. The backend for this is the BBPS system, Bharat Bill Payment System. Okay, this has completely replaced the payment gateways in many utility companies. Earlier, it was launched for 5 different types of utility services: water, electricity, gas, DTH, etc. Now it is extended to all recently. So it is becoming bigger now. Over a period of time, this infrastructure, this is again DPI, Digital Public Infrastructure. This is a government initiative. So here again, it will completely eliminate the use of payment gateways in the coming, 3 to 5 years, because then it will now it is covering all the categories, be it education, schools, colleges, okay, uh, or any other category. Now it is open to all the categories. So any say school is there, they can just using the authorized banks who are authorized for BBPS license. What they can do is they can just similarly simply use this service. It is an interoperable network. Okay. I gave you the example of a electricity bill where you have to go to the biller's site uh, and make the payment. Here you don't have to go anywhere. Okay, it is interoperable means once the electricity company, or let's take the example of a school. School decides that the quarterly fee payment has to be done by the parents. So they, through their bank, they will upload the data of students and payment which is due from the students on the BBPS platform. Now, BBPS platform is interoperable, means there are 50 plus banks which are member of BBPS system. So all 50 plus banks will, plus the fintechs which are linked with these banks. So in total, maybe 150 plus platforms, including Google Pay, Phone Pay, Paytm. Yeah, there you get the option of making the bill payment. So the point here is that this is interoperability, which is helping you in paying your child's school fees or your electricity bill through any of these 150 plus apps. Okay. You need not go to the school website and make the payments. Okay. This is replacing bill payments everywhere. So any recurring payment, any ad hoc payment, which used to be there is getting replaced by BBPS system. And this is again a government initiative. It's a digital public infrastructure. The fourth and the last one is the open banking and account aggregator. Okay. So account aggregator is basically a new framework which has recently come up. Okay. And it is yet to be popularized and getting popularized now. Account aggregator is where uh, there are entities which are appointed by the NPCI and RBI to act as account aggregator. What they do is they will uh, fetch the data of your account balance and show it on a platform where you want. For example, you have bank account in 10 different banks, okay, and you operate from Paytm app or Google Pay app. Or for example, you want to consolidate all these balances in your mobile banking app. So you have an account with Bandhan Bank. Bandhan Bank, and you have also account with 10 different banks, ICICI, HDFC. You want that in my Bandhan Bank app, all my account balances should be shown. So through account aggregator network, you can do that. It is getting popularized now. All the banks are still not onboarded on this. Once all the banks are onboarded, then you can do that. Right now, I think 5 to 6 banks are there. So you can at least get balances of these banks at a single place. It can be a fintech app, it can be a bank app, but point here is that at a single place you can see all the balances. You can aggregate your accounts. Okay, that is the point here. So this allows you also, to have a uniform view of your uh, wealth or the balances, which is otherwise, downloading statements from different platforms, going and checking. So it is a very cumbersome process. So these are the key drivers. Now we move on to the recent trends and the future outlook. Okay. Now the recent trends, we talk about embedded finance. Okay. We talk about blockchain and digital currency. We talk about artificial intelligence and data analytics. And we also talk about the financial inclusion, which Chairman Sir also touched upon. So don't get bogged down by the heavy terms which are used here, embedded finance. So embedded finance is nothing but is also one more buzzword we call it is disguised finance. Okay. For example, you are going to a e-commerce platform or a travel app. So Make My Trip. Okay. In Make My Trip, you are booking a holiday package which cost is 2 lakh rupees. Make My Trip says, okay, you can pay it in 3 installments without any additional cost. Okay. And you pay the first installment now, second installment in 30 days, and next installment is in 60 days. Okay. Now for you, it appears as if Make My Trip is giving you a facility of making the payment in installments, whereas it is not the case. It is a disguised finance. Okay. The moment uh, you opt for that, they will check your CIBIL, they will make an entry in your CIBIL, and they will sanction a loan of 2 lakh rupees in your name and the CIBIL. It is called BNPL, Buy Now Pay Later facility, which many of the banks have introduced. Okay. Now, why it is called embedded finance first? Because it is embedded in your travel decision. Okay. Means you did not go to the bank for getting a loan sanction. You were just looking for a travel destination. Your budget was, say, uh, whatever your budget was. I don't want to comment on that, but you just wanted, but you got an option that you can pay it in 3 installments. You said, okay, fine, I can pay in 3 installments. But in the end, there was a checkbox where it said, I agree to all terms and conditions. You just clicked on that. You didn't know that it will actually end up in sanctioning a loan. And there is a why I call it disguised finance because there is an arrangement of Make My Trip and the bank, wherein bank will get an interest from Make My Trip, maybe uh, some percentage of the total transaction value. So you don't know that it is included in your cost or not, but it is a finance, and that is why it is called disguised finance. Okay, so this embedded finance is everywhere now. You go to uh, a white goods store, you buy a fridge, TV, any big purchase, you get an option to pay in 4 EMIs, 5 EMIs, 6 EMIs, no cost EMIs. You swipe your credit card, they ask you to pay in 6 EMIs without any extra cost. So this is all embedded finance. Means you're not going to bank getting a loan sanction, but uh, this is embedded in your purchase decision. Okay. Now coming to blockchain and digital currency, you might have heard of CBDC, central bank digital currency, the future of fintech, which also includes cross-border payments in digital currencies. Now CBDC, although it is not very popular as of now, but it is riding on blockchain technology. Okay. Now, CBDC is like a digital wallet, okay, where you are getting an option of creating a wallet where instead of like you have a physical wallet, you may be having currency, one 500 rupees note, 100 rupees note, 150 rupees note, 120 rupees note, 110 rupees note, even coins. Similarly, in the app, you can see 500 rupee note, 100 rupee note, 50 rupee note, 20 rupee note, like that. So if you have to say both you and me are making CBDC uh, using the CBDC, okay, wallet, you load some money, say 2000 rupees in your CBDC wallet, they will give you the currency in digital form. Means you can see there is a note, it has 500 rupee note, it has a serial number also, okay, it is the same as, Mahatma Gandhi ji photo, all security features, everything is there, and there is a serial number. But that is there in your app. It is not there in your wallet. So it is there in your digital wallet. Okay. You want to pay 500 rupees to me. I am also having a digital wallet. You just click on that, your password, it will come to me. Select my wallet and it will come to me. I have that in my wallet. What is the advantage? Advantage is that you had to pay me 500 rupees. You could have very well paid through UPI. But in UPI, when you make the payment, there is a debit in your account, there is a credit in my account. Whereas what happens in a physical wallet, आपने अपने पर्स से निकाला मेरे को दिया तो कोई आपके अकाउंट में एंट्री आती है नहीं. सिमिलरली डिजिटल वॉलेट में आपने निकाला मेरे को दिया आपके वॉलेट में रिकॉर्ड रहेगा और आपकी स्क्रीन पे से वो 500 का नोट उड़ जाएगा लेकिन आपके अकाउंट में कोई एंट्री नहीं है उसकी. सो इट इज लाइक digitally you are paying me using the currency. Okay. This concept is not picking up more so because UPI is very prevalent and people are used to it, but eventually it will pick up. It is a recent concept and definitely it is going to pick up. That's why I'm discussing this in recent trends and it is a future outlook. Means in future you will see this trend picking up. Next is AI and data analytics. So artificial intelligence, AI and data analytics are the two emerging trends. Okay, which fintechs companies are increasingly they're leveraging upon this. Okay, because they want to enhance the fraud detection. They want to automate the credit scoring and personalize your financial services. So they're using your data at what time you do your banking transactions normally. What are the items on which you spend. Okay, uh, how many times you take a foreign travel in a year, how many times you make the school fees payment, whether you're buying an insurance policy or not. All this data, no, earlier there were no pointers, now there are pointers. When you make a payment, they know through a merchant category code that where the money is going. It is going to an insurance company or a kirana store or a hospital or a school. So they are storing that data and they want to know you better so that they can offer you personalized financial services. Later on, you see recommendations. This is again an emerging trend. And in future, you will find that when you have to make a payment to fee payment of your school, say at the beginning of a quarter, okay, or beginning of a financial year, and there is no money in your account, they have the data, they will automate the model and they will tell you, okay, you may be needing 1 lakh rupees this quarter to make the fee payment. So why don't you take it from me on a click of a button? And it is like a personal loan. and you pay me back after 3 months or 2 months. You take 1 lakh rupees and pay me back 1,10,000 rupees. So this is personalized financial service. Okay, this is just an example. There may be many such examples, which these fintech companies are working upon, and it is a future outlook. Also on the financial inclusion part, the fourth one, where the focus of financial inclusion remains a priority. Fintechs are creating innovative products which are tailored for rural areas, agriculture finance, MSME, to help the bridge between formal banking and unreserved communities. Okay, there are innovations which are happening, through which they are tracking even the livestock. Okay, for example, in a dairy farm. So now there are fintechs which have done pilot with RBI, where they are giving geotags for dairy farm financing, and the cows will have a tag in their neck, so they are able to track the animals. They through those tags they're able to track the health of the animals also, and they're able to track the productivity of the animals, how much milk they are capable of giving. So this helps them in realizing the future potential, like in this month, is this quarter, how much milk they will dairy farm will produce and how much income it will have. So this technology and all they're using very intensively. Uh, the chairman sir also talked about ULI, uniform, credit linked, like UPI. There is a ULI which was announced in Global FinTech Fest recently by uh, uh, by the governor of RBI, Shaktikanta Dasji, where he has announced that ULI is again like an open source where any fintech, can help the farmers to get KCC loan online through ULI. Okay, so all these things are going on. These are the future trends. Probably you will see that it is emerging very fast. So the conclusion for this is that from providing a basic payment solution to becoming a key driver of innovation. Okay, they have the fintechs have rapidly evolved, and with the ongoing advancement in technology and the collaboration between the banks and fintechs and the supportive regulatory framework by RBI, the Indian fintech ecosystem is going to be very big in future. It is transforming the banking experience for millions and billions of people, promoting financial inclusion and introducing new ways of accessing and managing the financial services. Now, the second subtopic of this today's topic is how the banks are coping up with this disruption. I have talked about that how the fintechs were introduced and then they matured and they became a competition to the banks. Some of the fintechs have become bigger than many banks in India, but the banks which were earlier thinking of it as a threat, uh, they are now collaborating with them and co-creating the solutions. Okay. So how they have coped up, some of the examples we will see here. It is a subtopic of our initial topic. Okay. So the adaptation of banks in this evolving environment. Okay. Banks are adapting to these rapid changes. Okay. In various ways. Uh, the agility, the convenience, and the new business models which are introduced by the fintech firms. Banks have responded by embracing the digital transformation, collaboration with fintechs, and developing in-house innovations to stay competitive. So here are the few examples we'll discuss. Okay, one is about the collaboration partnership with fintechs. So like API banking and open banking we are talking about. So we know that banks have uh, open banking softwares now, the application program interfaces, which allows the third-party developers to build on banking services. For example, some of the banks like ICICI, HDFC, and Yes Bank, they have embraced the open banking models. So they can give an interface of their core banking to fintechs, and fintechs can fetch balances from there. They can do transactions in their system. They can even get the customer information. They can open digital accounts, and the data is exchanged between bank CBS system and the fintech system. Then there are strategic fintech partnerships. So banks also form alliances with fintechs to leverage technological expertise, such as Axis Bank has partnered with FreeCharge, and SBI is working with various digital lending platforms. So this is a strategic partnership. They, want to build some business into with along with the fintech. Second is on the digital transformation and automation. We see uh, digital first banks. So some of the banks like Kotak, they have introduced 811. It is called 811. It is a purely digital bank. I was talking about Jupiter, similar to Jupiter. 811 is for millennials. And ICICI has also launched iMobile. Here, everything is online. You just have to, visit their website or mobile app, and you can open account. You can do transaction. You don't even know where your account is, which branch. Okay, and all the functionalities are available. So this is one. Then AI and automation. So now we know that investments are AI driven through chatbots. Okay, like robot, there is a chatbot. Robot is where you see a physical machine. You can talk to that machine. It can do certain functionalities. But chatbot is where you can just chat and get your answer. So SBI has introduced SIA. Okay. Similarly, there are RP. RP is robotic process automation. Robotic process automation is where you do certain repetitive tasks through process automation. Okay. This is again like a chatbot is chatting with the end customers. RPA is talking between two systems, and it is helping in automating the uh, transaction flow between these two applications. Okay. Uh, then paperless onboarding and eKYC we have talked about already. Third trend, how banks are coping up is development of neo banking and digital only platforms. Okay, so like we talked about neo banking, uh, here for business banking, ICICI Bank and Axis Bank have also launched their InstaBiz and Burgundy platforms for tech-savvy customers. So banks are also developing their digital only platform. In acquisition and investments, banks are investing in fintech startups. Just for example, HDFC has invested in payment and lending fintechs. So they have become parent company to those fintechs. So they can drive innovation. So this is another sort of partnership where they become the parent entity. Then fourth is on enhancing the digital payment ecosystem. If you see the we talked about DPI, digital payment uh, infrastructure. Okay, so here now there is UPI. One is UPI where banks are heavily involved in UPI ecosystem, and payment apps like Google Pay and PhonePe. We have extensively talked about. I have extensively talked about these two, during my entire presentation. So banks are also riding on this UPI ecosystem. They are using this ecosystem efficiently to enhance the customer experience and payments, and also contactless payments. So banks are promoting NFC, near field communication based contactless payments. For example, a Pays app of HDFC and Axis Bank Scan and Pay. So here basically you link your credit card to any of the NFC device. For example, your mobile phone is also an NFC device. Then there are NFC rings, there are NFC watches, even wearables like jacket, coat can become an NFC device. And you can just make the payment by touching it or waving it in front of any NFC device. Now you have seen that you must have seen QR standees, which is NFC enabled. So there you just wave your phone and small payments up to 5,000 can be made using NFC device. So your phone can be an NFC device, your watch can be an NFC device, your wallet can be an NFC device. You can have an NFC card, anything. So then is fifth is adoption in fintech driven lending models. So here also banks are working extensively. Okay, banks have adopted fintech models for quick digital lending to MSMEs. Then there are platforms like Capital Float, Lending Card, so banks have tie up with them. We also talked about buy now, pay later, BNPL. In disguise finance, I talked about this. So if you see, there are also in buy now, pay later platforms, ICICI Bank, HDFC Bank have introduced their own versions. Okay. I'll give you one prominent example. If you use Ola, okay, in Ola, they allow you to have a Ola Pay wallet through which you can book the taxi, payment will be deducted. At the month end, you pay the bill. Okay, it's like a postpaid. Okay, so this is my personal example. So when I first used it, I thought it's a service provided by Ola. So, but again, it was a disguised finance. So when I saw my civil statement next month, I got to know that they have tied up with one of the NBFC, and that NBFC has financed me a limit of rupees 25,000. So whenever I'm using, that limit is getting reduced, and when I pay back, my limit is restored. Okay. So this is again a disguised financing, but this is how ICFC and ICC they have introduced their own version too. Investing in cybersecurity and data protection. So banks are investing heavily on in cybersecurity and data protection to comply with RBI norms. And for fraud detection and AI also, they are investing heavily in machine learning AI for real-time fraud detection. Okay. Seventh is building innovation labs and incubators. So like RBI and NPCI, banks like ICICI, Axis Bank, they have innovation labs of their own, which are focused on future technologies like blockchain, AI, API banking, and they are co-creating solution with fintechs. Okay. Then there are hackathons. Hackathons like Marathon, there is a hackathon which is happening where banks they are hosting hackathons to collaborate with fintech developers. So they allow them to come up with new ideas and rapid technology adoption, which they can use for their customers. Then bank, there are wealth techs and robo advisory services. We talked about wealth tech platforms like Cred and Zerodha. So similarly, banks have their own wealth tech apps. ICICI Direct and HDFC Security are the examples. And AI-based robo advisory helps the customers, which is, it is no advisory sitting in the backend. System is having some models which will evaluate your wealth and they will advise you where to invest, where to not. So this is called a robo advisory or robotic advisory services, which is paid back by artificial intelligence technology, which is using various parameters of yours, like your age, your risk appetite, your expenses, your pattern of spending, your investment decisions, and then they advise you certain, advisory, how to invest, where to invest. Ninth point is on the regulatory adaptations and sandbox participation. So we talked about RBI's regulatory sandbox earlier. It is helping testing new technologies like blockchain and AI in the controlled environments. We also talked about account aggregator framework. The account aggregator is nothing but sharing your data of various bank accounts to one platform or one bank account, which can help you in having a bird's eye view of all your accounts at a fingertip. Last point is in the customer centric product development. Okay, so you see this personalized digital products. So banks are using big data analytics, okay, to offer customized banking products and targeted offers based on consumer behavior. Okay, so as I was talking about, they're tracking your spends now. If you are using Google Pay or Phone Pay to make your payments. So they track your spends. Where are you spending? Okay. Then they arrive at a consumer behavior, like what kind of a consumer you are and what could be the best offer for you. Okay. For example, if you are someone like a millennial who doesn't believe in savings, okay, and you are spending first and then you you get your salary, okay, which you use for your expenses. So they will offer you personal loan offers, okay, and some discounts on some air tickets or something, like that. Okay. Then on the omni-channel experiences, banks are integrating the physical and digital channels for omni-channel experiences. Means you need not go anywhere, so everything is available on your app. It is like universal app where if you see the app of IDFC Bank, okay, there you get all the options. I mean, you get your deposit account, your loan account, your term deposit, your mutual funds, your insurance policies, everything is in there in a single app. So it is an omni-channel experience for you, and you are basically not going to different apps or some things you go to bank for getting the statement, for something you get on the app. So in conclusion, banks in India, they have effectively responded to the fintech disruption by embracing the digital transformation, and by collaborating with the fintechs, by leveraging the cutting edge technologies. While the fintechs continue to push the boundaries of innovation, banks are integrating these advancements to their core operations, driving a symbiotic relationship that is reshaping the financial ecosystem. Traditional banks that adapt and innovate will continue to thrive in this evolving space. And this has helped everybody. This has helped the regulator in expanding the reach of the banking services to larger population. This has helped the banks, okay, in increasing their business. This has helped the fintech companies, to innovate and bring in new products. This has over and above, it has helped the customers or the consumers, okay, the account holders who have got largely benefited by this revolution which has happened in this world. And they have their access to financial services has become easier, has become cheaper. The cost of delivery, the turnaround time, it has come down drastically for the consumers. So I think now the floor is open for question and answers, if any. From my side, mm, uh, I think I have been able to do justice to this platform and give you enough information uh, to you on the fintech space and how they have been evolving and how the banks in India are coping up with this disruption in the financial space. Over to you, Aditi ma'am, if you can
Yeah, thank you, sir.
give me some of the questions which I can respond
Yes, sir.
within the limited time which we have.
Yes, sir. Sir, there is one question. What is the scope of CMAs in the fintech and banking sector?
So see, because CMAs are everywhere. Okay, I am also a CMA. Okay, so CMAs are everywhere. We study law, we study accounting and finance. Okay, we study budgeting, we study cost. Okay, cost accounting. So the knowledge which we are getting with this extensive and rigorous course and the practical application of these subjects is very much vital uh, in the banking. Uh, my advice to all young CMAs who are pursuing these courses to be relevant. I am aware that some of the course materials have been added on the technology side, but the technologies which are being used in the banking, especially the fintech, which are using these technologies. My advice to all young CMAs is that you also brush up some of these subjects where you get to know what is happening, what is relevant to the market. For example, the digital public infrastructure we talked about. So you should know, like, you should understand what is UPI, you should understand what is BBPS, what is ONDC. Okay, these are all the DPIs, and the entire fintech ecosystem is built on these digital infrastructure only, the Aadhaar infrastructure, the UPI infrastructure. Now ULI is also coming up. Okay, these are all relevant things. Okay, you have to be relevant if you really want to join this industry and be in the market. Yeah.
Yes, sir. There's another question. How in India, the cooperative banks and regional rural banks can adapt to this innovative fintech framework?
see, I would say that they are already adapting, and they have started now. You go, even it is not in tier 1 and tier 2 cities. The tier 3, tier 4, tier 5 cities also, if you go and see, you will find a QR standee everywhere. Okay. And those are not provided by big banks like ICICI or HDFC. Those are provided by cooperative banks only. Okay. So these cooperative banks may not be very good in legacy technologies, like their core banking system may not be as good as of SBI or HDFC, but these cooperative banks can also tie up with fintechs, and they are tying up. They are tying up with a lot of fintechs. And yesterday I was at a fintech event where I could see that many of the cooperative banks talked about their innovations, what they have done with the help of some of the fintechs, and they are able to provide the digital banking services to their merchants, to their clients, and to their consumers. So if you see a digital bank, a cooperative bank offering UPI services to their customers, you might see the handle is of not cooperative bank, it may be of HDFC Bank, but that is a tie-up between HDFC and cooperative bank. So they are increasingly using the infrastructure and coping up with the changes which are happening in banking, because for them also it is very important to stay relevant and be in the industry. Yeah.
Thank you, sir. There's another question, sir. Sir, who bears the interest cost in disguised finance, the merchant or the customer?
So if you ask me, mostly it is the merchant, uh, but this is still a question. Okay. So if you see, if I give you an example, in a disguised finance, say you are booking a package from Make My Trip, okay, and the package otherwise is also of 2 lakh rupees. If you are paying in 3 installment, it is still 2 lakh rupees. So if you see this example, the customer is not bearing the cost. This is a disguised finance. He is not bearing the cost. The example I gave of Ola, where you can pay monthly bill instead of every time you are paying for your ride, there also you are not paying any interest. If you pay every time, then also same price is there. If you are paying monthly, same price is there. Okay. So this is where the merchant is bearing the cost, because Ola knows that this is a value added service which I am giving to my customer. So my customer will stick to my platform because he has to pay once in a month instead of every time paying through UPI. And sometimes network may also not be there. Sometimes you are at a remote location, the app is not working. Sometimes your phone battery is dead. So you are relaxed. Okay, I have to pay monthly only, fine. You just book the cab. After that, your phone is dead. Even then, you are able to reach your destination and you pay monthly. So then you will prefer to book through Ola because he knows that there are other competitions also, like Uber is there. But you will prefer Ola because here you have to pay monthly. So that is a value added advantage. So in this case also, again, merchant is bearing the cost of disguised finance. But yes, there are certain explicit, uh, advances where you get the option with certain costs. So there, the end customer is bearing the cost. But otherwise, normally it is the merchant because the merchant wants to give you a facility. If you are going to a white goods store and buying a fridge and you get an option of paying in 6 EMIs, because they want to make your purchase decision easier. They want that, you buy it immediately rather than thinking that, it is of 60,000 rupees. So how will I pay? Okay. So then they will say, okay, fine. I have to pay in 6 installments. Okay, I can offer 10,000 rupees. I can afford 10,000 rupees per month. So you will basically buy it. So they are making your purchase decision easier. And for increasing their sales by making your purchase decision easier, they are bearing the cost of disguised financing. Yes.
Thank you, sir. Another one, sir. Is digital currency now operated in any state?
It is not limited to any state. Okay. There was a pilot which was done by RBI with 4 banks initially, which was later extended to 8 banks. Now it is being extended to all the banks. If you want a P2P, person to person transfer, Aditi ma'am wants to transfer some money to me. I want to transfer some money to Aditi ma'am. So wherever, irrespective of where you are located, I can transfer you that money, provided the bank account in which you have your CBDC wallet is the bank is providing the CBDC services in their bank account, and my bank account is also providing the CBDC services. Okay, so we can use it anywhere, irrespective of where you are located. The other part is where you have to make merchant payments. For example, the merchants now use QR code of UPI. Similarly, there is a QR code for CBDC payment also. Okay, so the merchant will get that QR standy from a bank or a fintech partner, but that fintech partner or bank should operate in the area where the merchant is operating. So it is, to answer the question simply, it is a universal thing which you can use anywhere, even from abroad you can use it. You are sitting in London, but you want to make 500 rupees payment to me, you can do that through digital currency without involving any, even forex markup will also not be there, because it is like you are giving a physical 500 rupee note. Instead of that, you are giving a digital 500 rupee note. Okay. So simply, yeah, location, it does not matter. The bank account which you have, whether that account is authorized for providing the CBDC services or not, matters.
Thank you very much, sir. Sir, just for within a few minutes, our chairman, sir, would want to have a special address for this. Over to you, sir.
Thank you. Thank you, Aditi ma'am.
Thank you, sir.
It's an excellent deliberations from our CMA Manoj Batra, who has really delved on the various facets of the fintech issues, which is going to be one of the future banking, perhaps, because bankers are now going to be very much a fintech company. Maybe in future we'll be listening from the many more programs will be there, because already I think in Mumbai, where you are now there every week or every month there is a fintech conference is going on. And let me tell you, sir, with our institutes, endeavor is that we have to also we have come out with in this particular time when the digital disruptions has already taken place, and our institute has come out with a plan, and already our council has already approved a very important course on advanced certificate course on fintech for our members. And this advanced certificate course of fintech has got 7 modules, and these are very relevant because we are having a very robust study materials, also compendium of study material, which would be distributed amongst our participants. I request all the participants to be with us on this program. And that's this fintech course material has to be, it has been prepared by many experts in the fintech fields, especially the we have taken help of the State Bank of India's many officials, those who have continuously evolving and innovating many products, and they are associated with these fintech issues. So ultimately, at the end of the day, I can just assure you, all the participants, what today our honorable speaker has mentioned. I understand that the CMA has got a great role to play. If you go in the fundamental, certain fundamental issues are there in the banking system. The fundamentals role of CMA in banking is clear governance, accountability, and transparency around cost management, transformations, executions, and decision making in BFSI sector. Risk assessment for project evaluation and customer due diligence, borrower credit appraisal and working capital assessment, asset and liability management system, NPA management advisory services, product, service, market, and customer profitability analysis, business valuations and asset valuations, strategic planning and decision making, calculation of customer product and the segment profitability, establishing an important decision making process through the utilizations of recognized costing techniques to evaluate alternative course of action. So these are the fundamental role of CMAs in banking as it has been evolved. And here I think that in the fintech companies, those who are going to be the partner of the banks. Already, many of the banks have adopted FinTechs. In a large number of FinTech companies they have already been partner of the banks. So here, the fundamental concept of the cost and management accounting is very much important and very much relevant. So far as the whole management, cost and management, of the whole product, the product evaluation, the products, whatever product is being innovated through the FinTech technology, and FinTech is evolving with this particular need of the hour of the customers. Here, the cost and management accountant can definitely play a big role. Our members, they are to be equipped with this, and that's why our institute is continuously having this sort of webinars to give a fillip on that. And basically, now that days are gone where only the balance sheets, assessment, balance sheets, appraisals, all these are not only to be taken into account, because these are to be accounted already. Artificial intelligence and these are machine learning and Power BI, they are already in place. They have been put in place in such a way that the requirement of your innovations, requirement of your strategic thinking, strategic decision making to help your company to grow further in these fierce competitions. As yes, already mentioned, our honorable speaker has mentioned that India is evolving as a huge, with the FinTech companies in a huge manner. And let me also just mention here, International Financial Service Center Authority, and a regulator, although all foreign, those who are coming into India and they are asking service from India. In the FinTech, we are doing all these things. In this particular phase, it's important for us to help the industry to grow. So far as our role is concerned as a consultant, so far as the role as a practicing CMA is concerned, we have got a huge role to play in IFSC also. And understanding this necessity, our institute has already entered into MOU with the International Financial Service Center Authority. I request our honorable speaker, who is already in a bank, he should also go through I will be sending our study materials and I will be sending our course module. I request him that whosoever in his bank they want to have this FinTech, he can also please advise them to join this course. Our course is very, we have kept in a very moderate fee. It's only 10,000 plus GST. It's not very much, because if you compare with other, organizations, you'll find huge money, because this course we want to actually inject in the mind of the people so that they can feel that yes, we can really, now we are equipped with the knowledge of FinTech, because a lot of innovations are taking place, and it is a requirement as a CMA what the financial inclusion and the nation builder we are talking about. We are talking about the inclusivity of the insurance by 2047, as IRDA has given clarion call that every Indian should be insured, because the protection gap is huge, 93% protection gap. So I think now it's a time to enrich with the knowledge of FinTech. And once we get our knowledge to that extent, and we can deliver definitely as a CMA to the entire industry, to the entire banking system, and bank will definitely utilize our CMAs in a big manner. And already many FinTech companies, many banks have expressed, especially the private sector banks, expressed their willingness to participate on a campus to take the fresh CMS. So it's a great opportunity for our profession also. With this in keeping in mind, we are organizing this program. I am thankful to our honorable speaker to delve on the various facets of this FinTech in this particular session. And I request everybody to please take note of his all advice and all sort of deliberations. It will be also put in our YouTube channel. So ultimately, at the end of the day, we will have further revisiting of this particular session. Thank you.
Thank you, Chairman, sir, for your address. And thank you, CMA Manoj Batra, sir, for such a impeccable presentation, sir. Our heartfelt thanks for such an insightful and engaging speech you have delivered. I mean, sir, your expertise and deep understanding on the subject matter has truly captivated the audience and provided us with a valuable perspective. We are grateful, sir, for your time and effort that you have dedicated in preparing and delivering such a thought-provoking presentation. Your contribution added immense value to our event, and we look forward for such an opportunity to learn from you again, sir. Thank you very much, sir. And also thank you, Chairman, sir. Now we are closing this ceremony, but before that, to thank a few more people. I would like to thank CMA Bibhuti Bhushan Nayak, our President ICMAI, CMA TCS Srinivasa Prasad sir, Vice President ICMAI, CMA Chittaranjan Chattopadhyay sir, Chairman BFSIB Board, all the other board members of BFSIB, our CMA Dibyendu Roy sir, our HOD of the BFSIB, and other team members of BFSIB for their continuous support, trust, and motivation. Thank you all. And so we wrap up for today. Thank you, sir.
Thank you.
Attaji, thank you.